Ladies and gentlemen,
Good evening.
Are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
Hi, it's Joanna Oakey here. Welcome back to the Deal Room Podcast, a podcast proudly brought to you by our commercial legal practice, Aspect Legal. Now, today we have back the fabulous Sarah Riegelhuth from Grow My Team, who is talking all about her experiences in acquisitions and exits, in the multiple acquisitions and exits she has been engaged in over the last 10 plus years as she's been growing many of her businesses and exiting from them. If you have not heard part one of this two-part series, I highly recommend you go back and look for part one, because in part one, we talked about Sarah's multiple experiences in buying, growing and selling businesses, and we dig into this concept of acquisition as a growth strategy. We also look at the hard lessons that she learned and her $1 million mistake. But here in part two of this two-part series, we're looking specifically at the lessons that she learnt from these mistakes at exit and how she's applied these lessons to the way that she now approaches growing a business. We also discuss how to grow a business if sale is in mind for the future. And we also look at some great lessons on how you can acquire fabulous teams for less than you might expect. So buckle in. Here we go for part two of our two-part series with Sarah.
ladies and gentlemen,
Good evening.
Are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
Hi, Sarah. Welcome back. I want to continue the discussion that we had in the last episode. You touched on so many great learnings that I think are absolutely applicable to a lot of businesses that I see, well, both in acquisition mode, but also in just this whole idea of what are they building and will that work for exit, which is a really interesting experience that you've shared. So it's quite unique. I mean, I meet many people who buy and sell businesses, but I meet many more who selling a business or buying a business is a rare event. And so I think your insights here are just like particularly useful for that set of businesses, because they don't have the chance to have a go, do it right or wrong, learn, and then move on to the next one. You know, quite often this is a one or two shot game for them. And that's why I think it's such important information. So rounding back then on some of your experiences and the things that you've learnt about growing a business to exit. So it sounds like you thought you had a bit of a formula for what might work on exit because it was a good business to run. And I quite often say that the best businesses to run are often the best businesses to sell as well. But you've demonstrated one instance of where a good business to run isn't necessarily a good business to sell. So do you think some of those learnings, have those learnings impacted how you build businesses now and grow businesses now?
Yes, definitely. And I think kind of what you've got to think about, or what I think about now, is like, what will I be selling? So I know what I'm building and what's important to a buyer.
And so what is that set now when you step that out?
It's like, is it likely, and we never know until we get there, but is it likely that I'm selling a parcel of clients that are going to get plugged into a bigger organization? Or is it more likely that I'm going to sell this whole brand and business and team and everything to either just somebody who wants to buy it, or maybe a bigger organization that kind of buys companies but continues to run them as their own brands or whatever? So you don't always know, but I think it's trying to think about, what is it that I'm going to be selling? So with Wealth Enhancers as an example, which was a millennial financial planning company, my ex-husband bought me out in the end, but I know I was the CEO of that company and I was building it to sell, but I knew that business was unlikely to be purchased by a bigger company to just merge it in with theirs. I knew that it would likely be purchased as its own brand, purely because there weren't really any other millennial financial planning businesses, and there weren't really any other businesses that were structured like ours. And so, the downside of building something that's so new and unique and amazing and like all your own fancy stuff is that you've got less buyers potentially because they can't just plug you into what they're doing. You're going to be asking them to start doing something totally different. So if you're going to be asking them that, you got to give them the team, the technology, the processes, the systems and everything. So what I saw for Wealth Enhancers when I was building it as CEO was that it would likely get acquired by actually like an institution who would want access to the millennials and the brand. They'd want to actually keep the brand. So they might put in a CEO. They might be able to leverage some of the fact that they were a huge institution with massive marketing budget, but the actual team that we'd constructed and the way we were doing business would likely stay the same. That was kind of what I had my eye on for that business. And that was also based on some of the larger banks and insurance companies talking to me and saying, it's so interesting what you're doing. If you ever want to sell, talk to us.
Right. And that is brilliant. I think that's really something for people who are building a business to focus on. Because indeed, if they're building to sell, the point of what we're talking about here is you may not be building something that has a high sale value. And if that's important to you, then rather than just focusing on growth and building the business you want, you also need to have a mind for the buyer and what will make a good saleable asset at the end of the day. But I think this is a really good point. You actually went out and spoke to people who you thought might be buyers and said, what do you value? Is that right? And was that the part of the discussion for you understanding what you needed to build, how you needed to build it so that it would have a value to some of these potential buyers?
Yeah. And I mean, I wasn't at the point where I was really pursuing that, but anytime I had a sense that someone was interested, I'd have a discussion to try to get more insight. So I wasn't being like massively strategic about it, but it was pretty obvious from my knowledge of the industry and knowledge of where all these other businesses were at was that, I mean, we were the first business in Australia to service millennials, and we were the largest. And most of the people that were coming into the market were looking to us for guidance. So, I knew it was pretty unlikely that there was another millennial-based financial planning business that was going to buy us and just plug the clients in. So partly conversations and partly my knowledge of the industry, but it was absolutely the next step that I was going to take when I was getting closer to maybe wanting to sell in that 3-year period or whatever. I would have started lining up those discussions with those buyers and having slightly more formal discussions than what I was having.
Yeah, clever. I like it. Okay, so what else then? In the last episode, you pointed to a few particular strategies that I think, correct me if I'm wrong, you had taken from your previous experience, i.e. putting in place a team that would continue to run when you weren't there, if you weren't there on sale, and having the marketing systems that would still continue to run while you weren't there. Is that right? Have I understood that part of the process correctly?
Absolutely. And I also do that because I don't really want to do that stuff anymore. For my own pleasure as my contribution to the company, I don't want to be the marketer and the salesperson and the ops manager and the finance person. Like, I like to be the CEO. I like to kind of just pull the levers and look at the things that are happening. More than anything, I like to be creative, be visionary, and just lead and grow my team. That's what I think I'm good at as well. And so I feel like building a business like that is also just more attractive to be sold because I can replace myself as CEO. And when I'm that kind of CEO, like, I'm not doing that much anyway, like, as in, I'm not a cog in the wheel, if that makes sense. I'm doing a lot from my brain power and I'm contributing a lot, but it's not like, literally, I'll be very transparent. I had a breakdown last year and I took a month off and I just told my team, I'm out. I can't do anything. You guys do your work. And they're like, that's fine. We know what we're doing. And they just do their thing. Like, the business to a degree runs without me. It wouldn't run successfully for very long without me, but the kind of business I want to build now is a business that everybody is very empowered to kind of own their part of the business, and everybody knows how we all work together to make the magic happen. I'm not a micromanager in any way anymore, and I think that helps me build businesses that are probably more attractive for sale as well. Just my own selfish reasons to not want to have to do all the work.
Perfect. I love it. I'm sold. I'm with you. And I think I've always been very interested in the grow my team idea. I'm a strong believer in going outside your sort of local area to try and work out who it is that you could bring into your organization to help provide different skill sets. What you're talking about here, I feel many people would hear what you're saying and say, okay, well, that's fabulous, but I'm a small business, or I'm a small to medium business. I can't afford to go and just grab all of these different people on, full wages to come in. I need the financial backing to be able to do that. But maybe here we can talk a little bit about Grow My Team, because I feel like, my understanding of what you do is really about making that far more accessible for businesses.
Yeah, that's a very, very good point, actually, because I think, disclaimer and all this, like, none of these businesses are huge. The three main companies I've sold, the sale price has been between $2 and $2.5 million. So I seem to be an expert at selling businesses for just over $2 million. Hoping to expand and broaden my expertise over the next 10 years. But yeah, no, so they're not huge companies to date that I've been running. They're absolutely kind of that small growing enterprise. But what I've been able to do is engage team members that are based in other parts of the world that are a lot less costly than an Australian CFO, for example, or marketing manager or whatever it may be. So, my marketing manager in Grow My Team, who's come with me, she was my marketing manager in Wealth Enhancers. She's now with me in Grow My Team. She's, I think, costs me $36,000 a year or something like that. And she is gun. Like, she is really, really, really amazing.
And we're talking high level marketing,
She does the whole strategy.
Like a 150 grand employee here in Australia.
Absolutely.
Yeah.
Absolutely. Like, she's amazing. And she doesn't have anyone working under her just yet, other than like a graphic design company that we use. But, she'll build that. We're a smallish company right now. We're growing, about to raise money and everything. She'll build that team. Like, I won't build her team for her. She'll build her team. She's absolutely my marketing manager.
And I just love that. I just love the idea that you have accessibility if you just expand, your mindset. Because many business owners, I find, have also dabbled in offshoring and dabbled, didn't work, took too much energy, so they sort of discard that and say, well, quality offshore isn't the same as quality onshore. And I call garbage on that. Like, I just say, well, that's why would someone onshore like inherently be any better than any other,
It's actually racist,
Absolutely.
And I know people aren't meaning to be, but like, let's just see it for what it is. Like, you got to be kidding yourself if you really think that Australians or Americans or wherever you're from are the best in the world at every single thing and you can't possibly find anyone else. Like, it's just ludicrous when you really break it down. But yeah, I mean, I think the industry or the idea of offshoring, outsourcing, whatever you call it, like, the industry is a lot bigger. There's a lot more options and opportunities now. And I don't even see what I do as offshoring or outsourcing. I'm building a team just exactly as I would build a team locally. They just happen to be based in other parts of the world.
And that's it. And that's the problem, I think. Often when people look at offshoring, because they have a lower cost of engagement, they then say, okay, I'm just going to give them, quite often it's just all the shit that no one else wants to do here. And they suddenly think that someone overseas will magically be able to pick it up and, make sense of the crap in, but crap in, crap out is what I think. But also a failure to engage.
Yeah.
Like you engage your onshore, in the same office kind of staff members.
Exact same onboarding process.
Absolutely.
Like, why would it be any different? And exact same job description, exact same job advertisement, exact same time taken to hire, the actual recruitment process. Like, if you do a series of 3 interviews, do a series of 3 interviews. Like, you are finding a team member who needs to be skill fit, experience fit, cultural fit, all of the things. They just happen to be based somewhere else. Another term I hate, and you triggered me on it because of what you were saying about crap in, crap out, is this term virtual assistant. I'm like, well, what are you hiring? Is this a personal assistant or like an executive assistant that works offshore? So they need to be able to calendar manage, know you quite intimately, your life, email manage. So it's a personal assistant that you're hiring. But people use this term virtual assistant that it's like they're going to hire a robot who can just do all this magical tasks for them.
Yeah.
And, straight away at Grow My Team, when we have someone say, I want to hire a VA, I'm just like, all right, let's just go back to basics, because I don't even know what a VA is. Like,
Yeah.
What are you actually trying to hire? Is this a digital marketing person? Is this an operations manager? Is this what are the jobs they're doing? And then we'll put the title around it and the job description, because most of the time they're not trying to hire a personal assistant that's virtual. They're trying to hire a social media manager who can also do bookkeeping. And I'm like, well, when you find those unicorns, let me know. Because they don't exist in Australia and they don't exist anywhere else.
You were so right.
Most marketers are not that great at bookkeeping.
Yeah, I'm absolutely with you. Now, look, we've probably gone a long way out of our talking about acquisitions and sales, but I guess bringing it back to the point of all of this, it's about looking in a broader sense at your business and finding ways.
Yeah.
And overlooking the barriers that you think are there to creating a business that is saleable and transferable to someone else if you're not going to be involved. And these are just strategies in helping get there, I guess.
Absolutely. And I guess the point we're talking about here is that for less money, you can build an amazing team that's running your whole company. So even if you are a smaller business and you're listening to this thinking, oh, that's all well and good, but my business is only turning over $500,000 or whatever, like $500,000 business can be, have quite a team if you're thinking outside the box. So you become a better business for someone to buy because you've got more resources to create more systems and processes and handle the marketing engine and all of that kind of thing. So
yeah. Absolutely. All right. And now I just want to change tack a little bit and talk about your perspectives on acquisitions now. So we started in our previous episode talking together about your feelings about acquisitions as a growth strategy and that being a good strategy, at least for the businesses that you're involved in at that time. Where are you at now in your thoughts on acquisitions as a growth strategy? When was the last acquisition you did?
Well, I mean, when it comes to Grow My Team, I would love to acquire businesses to grow, like absolutely. I haven't found any. So, I mean, that's because a lot of our, I guess, competitors or other people in the space are more the BPO model where they have an office in Manila or Jakarta or Johannesburg and people are going, and that's not our model. Our model is professionals who work from home. But if I could acquire another business that's a little smaller or the same size as ours and merge it in, that'd be amazing because, overnight you basically double your size. So, I mean, that would be my ideal, but I don't feel that I have, in my hunting, I haven't found it. So that's that. I have just acquired a business, Airbnb Hands-Free. It's an Airbnb property management business. So, but that excites me as well, just a whole new business. I've got a team that are in there running that. I'm a significant investor in the business. My old operations manager / integrator is the major shareholder. It's actually my super fund that's invested in my portion, but she's actually the main shareholder and running the business. But, that was exciting for me because it was a 2-year-old business that was already turning over about $1.5 million in revenue. And just straight away, I'm like, that's exciting to me. Like once a business gets to that size, you've got a lot of levers you can pull, a lot of things you can do, and not having to struggle my own way. Starting up a company is exciting and fun, but it's hard to get to that first mil. It's hard to get over these different growth humps. And this is a case where the founders, he's like me, he's started something else that he's more excited about and he wants to go on that path, and he's a bit burnt out from it, which I get. It's happened. And he's a great person. I really like him. Our negotiation was amazing. It was fair. We get on very well from a personality perspective, very values aligned, and negotiation was just, here's the initial deal. Okay, well, I like that, but I'd like this. Yeah, that's fair. How about this? Yeah, that's fair. How about that? And it just felt like the whole way along flow. There was no resistance. A
very different negotiation to the issue you wanted to talk about. Yeah.
Totally different. Yeah, we would end up just sitting on, and it was all done via Zoom because I live in the US and he's in Byron Bay in Australia. But, we'd end up sitting on our Zoom calls that my business partners had to watch later to catch up. And we'd gone over an hour just chatting about stuff that we had in common. But, that's a much nicer way to do business, I think. And we still did all the financial modeling and all the due diligence and all of that, but it was just nice. I just knew I'm doing business with a good person and I just don't have the same feelings that I had in previous. And we're a couple of months into the handover, and as it sounds like it's going really well from from the girl who's running it. So, yeah.
And so how did you kick off on that? Because I think to give context to my question, I think we have lots of listeners who are generally interested in this idea of acquiring a business, get into a new business set, or, quite often we have listeners who are coming out of corporate and looking to use their skill set by acquiring a business. But just generally speaking, what was the background work? So you obviously started, well, I don't know if it's obvious or not, maybe you didn't. Did you start by saying, we're looking for a particularly interesting type of business, let's go find a business? Is that how it started?
No, like randomly, I'm in EO, Entrepreneurs Organisation, and one of my forum mates, he and I were looking at, this was actually before I came back into the forum, because you're not allowed to do business with forum mates, but we were looking at potentially buying a business together. And then I ended up moving back to Colorado and rejoining the forum. So he sent it to me late last year just as something he'd come across in his search. So he was just on, there's a website called Flipper, and I guess it was like an email thing that came out. It was just something that he was interested in. He quickly lost interest and I quickly gained interest. So it was very random. I'd never thought about buying an Airbnb property management business, but it was just something that I liked. And I'm even with my ideas, my business ideas, I feel them. Like I like to sit with them, and if I'm still obsessing over it in a month, 2 months, 6 months, like that's a pretty good sign to do it, because there's a lot of things that float through me that I don't kind of latch onto. And this business I really liked. I reached out fairly early on, started doing a little basic due diligence, just like looking at the IM and everything. And then it got sold. And I was like, oh, well, wasn't meant to be. Let it go. And then a month or 2 months later, I got an email, oh, it's not sold. It's back on the market. The deal fell through. And I was like, great. Just picked up discussions again and started deep diving, and it was just a matter of, I don't know, there's just something that innately attracted me to the business. And then once I dove into it, the numbers looked good. And then when I figured out I had the perfect person to run it and offered her the opportunity as actually a primary shareholder, and I've ended up investing through my super fund, so I'm not even actually running it, but I just liked the business.
And so can we dig into that a little bit more? Because quite often what happens, I think, is people become more skilled in an area. Say, for example, you growing and buying and selling businesses. Some of the skill set that you have, you start labeling with it just felt right. But usually what is in there is a skill set that is really useful perhaps to other people. So if we dig into that just a little bit more, what were the signs for you that it looked like a good business? If you can sort of like, what gave you that feeling? What was it when you looked at it that gave you that feeling you could make it work?
I mean, part of it is, who was this founder and what were they able to do, and who am I, or who is the person that's going to run the company and what are they able to do? Where are our skill sets? Looking for that opportunity, I suppose. But what really attracted me to this one was the fast growing nature of it. So, I think I said the stat earlier, only 4% of businesses get to a million, and it had gotten there within 2 years. So, and having, started a number of companies myself that I've managed to achieve that $1 million revenue mark, I know how hard that is.
Yeah.
And how much work it takes. And so that's always a sign that, they're onto something.
Yeah. It had gotten to that point quickly, I guess.
Yeah. Getting to it at all and getting to it that quickly, I was like, all right, well, that's something. It was already profitable as well. So that was something else that I thought, I've run companies for the most part that have taken about 4 or 5 years to get profitable. Admittedly, I try to grow, and that's why I'm kind of reinvesting, but still, I know how tough that is. And then from a founder skill set, he was very strong operationally and systems, and really hadn't invested anything in marketing. So it had all grown through word of mouth. And I knew that my team and the team that we could put in, like, we're actually really strong on marketing and operations and all of that. But that was somewhere that I knew we could get extra leverage.
You could see the upside, I guess, that linked in with your skill set. Brilliant. And so then how did you work out the valuation model for it? Is that something you did yourself, or did you use advisors to work out, what you felt the value was for the purchase price?
Yeah, I mean, we kind of anchored around his asking price. And then it was on one of these websites where it was up for sale, and he'd put the purchase price that he wanted on there. So that becomes an anchor point. If you're familiar with negotiating, often that first number that goes out is kind of what the deal gets anchored around. But we ended up doing a multiple of profit. So I think we ended up doing 3 times, just under 3 times profit. But my team team, like when we analysed the deal and normalised the profit and figured out how we would be able to run this business, you know, we were able to get that profit number up quite a bit higher. So we could feel like, well, there's the upside there as well. Like this is actually potentially worth more than, once we do our magic, it's worth more than what we're paying for it. In its current state, it's worth what it is, but we knew what we could do there. So that was essentially how we kind of came to it.
Fabulous.
And I mean, in this case, it wasn't a huge purchase in terms of the price. So I didn't involve extensive like advisors and things. And I think that's part of it as well. Like how much money are you putting on the line and what's it worth you? There's always that risk assessment that we're making as investors. Like if you've got a few $1 million in cash and you're looking to buy a business for $100,000, are you going to spend $20,000 on advisors? No, because one, you know, the $100,000, if you lose it, actually isn't probably going to change your life. Like you will survive.
Yeah.
If you've got $100,000 in the bank and you're going to buy a $2 million business, you'd want to spend $20,000 on advisors.
Yeah.
Do you know what I mean? Like I think it's just assessing what you need and where you're at and what experience you've had before as well. So yeah, we were pretty comfortable with the heads together that were buying it, that we could do it ourselves.
And was there anything, you know, reflecting on the acquisition experience, is there anything that you think you had learnt from the past that you found really useful that you then brought to the table in terms of this acquisition, other than trusting your gut perhaps more in terms of finding that cultural fit? But was there anything else?
Right, that's like the big one for me right now. But yeah, the way that I structured the deal, the way that I structured the tranche payment, so we actually put a value, because basically we're buying a rent roll of properties, plus the team and the system and all of that. But we did about a 60-40. So I actually did a similar deal to the one that I'd done, but I am going to pay the guy. I'm not there to, and it's only a 6-month earnout.
Right.
So he was willing to take around 60%, but it's not 2 years. He's going to get the rest of his money within 6 months. And that was something that he and I negotiated that was fair. And I basically straight up said to him, like, this happened to me. I was talking to him when he was still negotiating with other people. I'm like, don't do a deal like this. And I'm happy to be like, literally, if I'm losing clients after 6 months, that's not on you. Like that's on me. And I'm going to do a fair deal as well. So we put a value on each of the properties that we were buying that tied into that overall value based on previous 12 months revenue that property was contributing. And then if any of them fall off because of the service prior to us coming on, we don't pay for them in the second tranche. If they fall off because of our service, we still pay. And we agreed on that as well, that we would have a discussion with any client who left and find out why they were leaving. So I feel like, you know, on both sides, I felt comfortable protecting myself if a whole bunch of clients exit quickly.
Yeah.
But I also feel comfortable to own it, that if they leave after 6 months, that's on us. That's not on him.
That's a really great strategy. So if people are listening in to this, I think that's a great one to add to the toolkit. I really love it. And so I guess rounding all of this out, I think this has been just such a fabulous discussion. We've touched many different areas here, but I guess just, you know, sort of big picture overview, reflecting back on your experiences. Here we're talking our listening audience, the businesses who are buying and selling, but also brokers and corporate advisors and accountants, you know, who are part of that deal team, where some of this information is just as useful as well, because I think it's really useful for us all as advisors to understand our clients' positions as well. So bearing in mind that sort of audience, is there any sort of lasting comments, any lasting thoughts about insights and lessons learned over these many years of acquiring and selling? It's a big question. It's fine if there's not.
Yeah, I don't know. I think, you know, and I've said it already, but really the big one for me right now is doing business with who I feel are good people. And, you know, that's in my limited experience, but the issues I've had have been where I've known the deal hasn't been good based on the personality / culture / values fit. And you know what? I think the other lesson on it is, if that is the case and you want out, just do a deal that you're comfortable with. You know, you kind of protect yourself in the way that you do the deal. I think there's a lot more creativity that you can build into deals. I did a really interesting one that I'm not going to go into right now, but it was with my ex-husband when I was selling out of Wealth Enhancers. And I think the way that we put that deal together was there was a lot of complexity in it to protect both sides. And I think we can build a lot more complexity into our deals, which gives us more levers to pull when we're negotiating than what often is the case. Often we're just talking about price and basic payment terms, but there is so much more that you can build into deals. Like very quickly on that one, he wanted to buy me out over time. And so what I did was shares would transfer as we bought. So that was part of the complexity, and there was a lot more to it. But, rather than just trusting that the payment would be made because of what had happened in my past. And I'd said to myself, I'll never do a deal again where I get, a little bit upfront and I have to wait for my money. But I was like, well, if that's the clincher for him, how can I protect myself? And I was like, well, you can buy shares off me at any point at this fixed price for 2 years. And you can buy 1 share or 10 or 100 or whatever. That there's more levers we can pull than we think. I think there's more complexity we can build into deals than we think. And that will help satisfy everybody to get what they need and what's important to them.
It's such a good point. And the reason why is, other than it being an excellent point in terms of people thinking about it as a strategy, it's based on the concept of actually understanding what the other party really wants at base and what you want at base. That one element is something that I think quite often is absolutely overlooked, but understanding at core what the other party wants, understanding at core what is important to you can help you get creative about how you get there. So I love it. What a great point.
Yeah, totally. Because there is just something you can give that the other person's like, oh, and you might be like, I don't mind about that. And they're just like, thank you. That gives me the security or the whatever that I need to make me feel good about this. And I do, with all of that being said, like it's easier to have those kinds of discussions when there's a level of trust and respect just amongst the people involved. It's really hard to have those discussions when there's animosity. I think there's just 2 ways to negotiate. There's fighting. And there's egos and there's like, I've got to win this. And then there's like when you come together with someone who we just want the same outcome, which is, I don't want to own this business anymore and you do. And we both want it to be successful and no one's trying to screw anyone. You can actually have quite open discussions about what do you need? This is what I need. And I think it's hard. A lot of people want to keep those cards to their chest, but that's coming from that mindset that you have to win. And is it really winning or is it creating a great deal for everybody?
And it's also a really, really good point for the deal advisors as well, because I just couldn't count the number of times I've met people in the industry who've shared with me experiences of working with lawyers or accountants, and particularly lawyers. I think they can be particularly bad at this. I say they as though I'm not in the industry, but, but so many experiences that people have had with lawyers who will just go through contracts and just pull up anything that could be a risk and want it changed. But with this mindset, what we're talking about, well, what are the real risks? What do people really want? Rather than being aggressive and argumentative about everything, like let's get real, get commercial and get to the core.
Because you also want to eliminate there being a need to fight over something later. And so you kind of want to try to solve that up front, that everyone, like the main points of the deal are fair and everybody agrees. Like the deal that I did that went sideways, it was not fair that we would not pay for a client who left 2 years after we had any communication with them. There's no world in which that is a fair term. And I just didn't see that because I thought it wouldn't happen. But when I was there, do I really want to go to court and have to prove why a client left 2 years later? Like that's just crazy. The term just wasn't fair.
Well, and how many learnings have you had from that now?
So many.
But we hope for our listeners that taking them through this also provides a great warning story for them. Look, Sarah, I just want to say a massive thank you to you. You've given us so much time, so much insight. There's so many things there that are just absolute gold nugget. How do our listeners contact you if they want to access Grow My Team, which, I just massively endorse. I think you're doing an absolutely brilliant thing. And I have to say very public, I think it's such a great thing that I'm working with you as well right now for our team members. So I think you're fabulous. So please tell us how our listeners can find you.
I love it. And I'm so excited about those candidates that got sent over to you. Sarah, Sarah, at growmyteam.com.au is the easiest way to get me. I'm on all the social medias and all of that kind of thing as well. But send me an email. I'd love to talk with people about whatever's coming up for them after listening to this podcast.
Brilliant. You are an absolute rock star. What a brilliant run through your history there. I absolutely love it. Sarah, thank you so much.
Thank you so much for having me. I appreciate it. It's been really fun.
Well, that's it for our two-part series with Sarah Riegelhuth from Grow My Team. Now, if you'd like to contact Sarah, obviously she gave you those details, but if you were running along the beach or on your commute into work, perhaps you didn't have a pen on you. So don't fear. All you have to do is head over to our show notes or our podcast website at thedealroompodcast.com, where you'll be able to find details of how to contact Sarah or her team at Grow My Team, or you'll also be able to find a link through to her on LinkedIn if you want to connect. Now, at our Deal Room Podcast website, you will also find details of how to contact our lawyers at Aspect Legal if you or your clients would like to discuss any legal aspects of sales or acquisitions, or preparing for sale or preparing for acquisitions. We've got a number of great services to guide businesses through these processes and help them prepare if we can get there in time enough before their acquisition or exit. We work with clients both big and small and have different types of services depending on size and complexity. So don't hesitate to book an appointment if you'd like to find out how we can assist. And finally, if you've enjoyed what you heard today, then please pop over to your favourite podcast player and leave us a review. Look, we'd be ever so grateful. It's reviews like those from you that help us to expand our reach into other people who are interested in listening to some of our fabulous guests and these really interesting topics. And that's it. That's it for today. I hope you enjoyed this two-part series just as much as I did. And I just want to thank you, our listeners, for listening in. You've been listening to Joanna Oakey and the Deal Room Podcast. Proudly brought to you by our commercial legal practice, Aspect Legal. See you next time. Aspect Legal has a number of great services that help businesses prepare for a sale or acquisition, to help them prepare in advance and to get transaction ready. We've also got a range of services to help guide businesses through the sale and acquisitions process. We work with clients both big and small and have different types of services depending on size and complexity. We provide a free consultation to discuss your proposed sale or acquisition. So see our show notes on how to book a time to speak with us, or head over to our website at aspectlegal.com.au.
Ladies and gentlemen.
That will conclude this evening's entertainment.
Thanks for listening to the Deal Room Podcast. To find out more about this episode and other episodes in the series, check out the show notes or head over to our website at thedealroompodcast.com.au.